sidelines now, it's your time. Let's show you how. No more waiting, no more doubt. We're building wealth from the ground up now. From the ground up, brick by brick, turning small steps into something big. Doors are open, don't miss out. We're building wealth from the ground up now. With the right plan, you can tell. Folks do well, we do well. Yeah, the future's looking well. Let's start building right now. From the ground up. From first deal to a full portfolio. Learn the game, now you're in control. Every move is a step ahead. Plant the seeds, watch them spread. It's your moment, here's your route. We're building wealth from the ground up now. From the ground up, brick by brick, turning small steps into something big. Doors are open, don't miss out. We're building wealth from the ground up now. With the right guide, you can tell. Folks do well, we do well. Take that chance, no fear, no doubt. Let's start building right now. Let's go! Build it strong, building big, only now. Join now, pay it well, you already know. Folks do well, we do well. From the ground up, here we rise, turning dreams into real life highs. This is it, your breakout route. We're building wealth from the ground up now. Yeah, we said it, ring the bell. Folks do well, we do well. Lights on, crowd loud. Let's start landing right now. From the ground up. From the ground up. From the ground up.
Hey folks, let me ask you something. What if you could build wealth without working more hours, without depending on a boss, and with something that tends to go up in value over time? Sounds good. That's what real estate investing can do. Now, this is important. I'm not here to sell you some fantasy. Real estate is not get rich quick. But it is one of the most proven ways to build long-term wealth. It is no coincidence that more than 90% of all millionaires have real estate investments in their portfolio. So, why real estate? Well, let's start with why people invest in real estate in the first place. Number one, cash flow. That's money that comes in every month after expenses. Example, rent comes in, bills go out. You keep what's left. 2, appreciation. Over time, property values tend to rise. You buy it $150,000. A few years later, it's worth $220,000. There are tax advantages. Investors often pay less in taxes because of depreciation, write-offs, expense deductions. 4. Leverage. You can control a $200,000 asset with a much smaller down payment. Stability. People always need a place to live. And that makes real estate one of the most stable long-term investments. So instead of trading time for money, you start building assets that work for you. Let's talk about the biggest miss. Before we start, we need to clear out some bad thinking. Myth number 1, you need a ton of money. No, you need strategy, not just money. Myth 2, you need perfect credit. Good credit does help, but there are ways around that. Myth number 3, it's too risky. Listen closely. Doing nothing is too risky. The key is learning how to minimize risk. Myth number 4, you need to know everything first. No, you learn as you go, just like anything else. So, how do you get started? Let's break this down into a simple starting plan. Step 1, get your finances in order. Check your credit. Reduce or eliminate unnecessary debt. Save some capital. Even small amounts matter. Step 2, choose a strategy. You don't need to do everything. Just pick one. Buy and hold is a strategy. Very beginner friendly. You buy a property, rent it out, collect the monthly income. That's strategy 2. Strategy 3, fix and flip. Buy low, renovate, sell for a profit. House hacking. And this is best for beginners. Live in part of the property, rent out the rest. You got an extra bedroom, rent out that extra room. You got 2 extra bedrooms, rent them both out. Let the tenants cover your mortgage. Step 3, learn your market. You don't invest everywhere. You invest where the numbers work. Look for affordable entry prices, where there would be a strong rental demand, where there's job growth. Step 4, build a team. You don't do this alone. Just a second. I hit the wrong button. You need a good real estate agent. I got you covered. You need a good lender. A contractor. You may need a property manager if you don't want to manage your properties yourself. Step 5, run the numbers. This is where people mess up. You don't buy based on emotion. You buy based on purchase price, rent potential, expenses, cash flow, If the numbers don't work, you walk away. Most investors look for a 1% rule. What that means is if you pay $100,000 for a property, then it should generate 1% in monthly gross income. Excuse me, to be considered profitable. So, $100,000 property should generate $1,000 a month in income. And just this past week, I saw 3 properties here in Soki that expired, meaning they did not sell, that had a greater return than 1%. Yeah, the agent did not market the property correctly. They should have hired me. Realistic first deal example. Say you buy a property for $180,000. Your mortgage, your taxes, your insurance, $1,200 a month. Rent, excuse me, let's say you rent it out for $1,600 a month. That leaves about $400 a month. Now subtract maintenance and vacancy. You might net $200 a month. That may not sound life-changing, but here's what's happening. Your tenant is paying your mortgage. Your property is increasing in value. You're building equity every month. So you may only be putting $200 a month in your pocket right now, but every month you're making 3-4 times that altogether. Here's some common mistakes to avoid. Let me save you some pain. Mistake number 1, overpaying. If you buy wrong, everything else suffers. Mistake number 2, underestimating repairs. Always budget more than you think. Mistake number 3, bad tenants. Screening matters more than almost anything. Mistake number 4, waiting too long. Analysis paralysis kills more deals than bad decisions. So here's your CTA, your call to action. You don't need 10 properties to start. You need 1. And you don't need to be perfect. You just need to begin. So here's your next step. Learn your local market. Talk to a real estate professional. Start looking at deals. Run numbers consistently. Because the difference between people who succeed in real estate and those who don't is simple. Action. Not someday. Not when everything is perfect. Start now. This is Stephen Dow with Keller Williams First Choice Realty here in Bowling Green, Kentucky. I sincerely hope that this has been helpful to you, and I would love the opportunity to earn your business. Remember, folks do well with Dow, and the ones who start early do even better. From first-time investors to multi-million-dollar portfolios, I help people win in real estate. Thank you so much.
From the ground up.